Let's talk about a company that might just be the quiet engine powering the entire electric vehicle revolution. It's a chip maker you've probably never heard of, and you know what? That's exactly what makes it so interesting.
Okay, so when you hear computer chips, your mind probably jumps to names like NVIDIA or Intel, right? The giants building the super-fast digital brains for all our gadgets. But as an investor, you know the real edge is often found where nobody else is looking.
And that hunt for a hidden edge? Well, it leads us to a special kind of chip maker. So let's really dig into the investment case for X-FAB, a company that's playing a totally different game.
So what is it that makes X-FAB so different from the chip giants we all know and talk about? Well, it all comes down to the actual chips they make.
See, X-FAB is what's called a specialty foundry. They're not in the race for pure raw speed. Instead, they build analog chips. Think of these as the nervous system for our devices. They take real-world stuff like temperature, sound, or pressure, and translate it into digital language that computers can understand.
This really highlights a huge split in the chip universe. On one side, you've got the more crowd, the TSMCs of the world who are just obsessed with making smaller, faster digital brains. But on the other side, you've got X-FAB in this more space, building the tough, reliable analog nervous systems. They're not chasing the latest 3-nanometer tech. Nope. They are masters of mature, super reliable processes that are perfect for the real world.
And that very specific focus has put X-FAB in the perfect position to ride some of the biggest economic waves happening right now.
And you can see exactly where they're playing just by looking at where their money comes from. A massive 2/3 of their business is directly from the automotive sector. Yeah, forget about what's in your next smartphone. These guys are building the chips for your next car.
And wow, has that bet on automotive paid off? In 2023, right as the EV boom was taking off, their automotive revenue jumped by an incredible 38%. That, right there, is the engine of their growth story. And these aren't just abstract trends. We're talking about the guts of an electric vehicle, the chips that manage the battery and power systems. We're talking about the sensors that make modern factories work. And that advanced medical tech, it flat out does not function without their kind of specialized chips.
Okay, but let's be real. The chip industry is absolutely cutthroat. Growth is great, but it's worthless if you can't protect it. So, the big question is, how does X-FAB defend its turf? Let's take a look at the fortress they've built.
From an investor's point of view, this boils down to 3 key defenses, or moats. First, their specialized technology is just really hard to copy. That, in turn, creates the second moat, incredibly high switching costs, which basically lock their customers in. And third, and this is a big one right now, is where they're located.
And hey, you don't just have to take my word for it. Management themselves have said it. Once a customer designs their product around an X-FAB chip, switching to a competitor is a total nightmare. It means a complete, expensive redesign. In high-stakes fields like cars and medicine, that's a very big burden nobody wants to take on.
And that third moat, their geography, is more critical now than ever. With major factories in Germany and France, X-FAB offers something many of their Asian-based rivals just can't. Supply chain security, right in Europe's backyard. I mean, if you're a European car maker, that is a huge advantage.
So, let's recap. We've got a unique business riding powerful trends with strong defenses. That's a compelling story, right? But for an investor, a great story is worthless if the price isn't right. So we've got to check the price tag. Let's talk valuation.
This is the million-dollar question, isn't it? Is all this good news already baked into the stock price? Or is the market missing something? Is there an opportunity here?
Well, when you stack X-FAB up against its direct competitors, something pretty interesting jumps out. Using a metric like EV to EBITDA, which is great for these factory-heavy businesses, X-FAB is trading at around 7.5 times. Its competitors, they're up closer to 9.5 or even 10. And get this, it's trading at nearly its book value, which for a growing tech company, that's unusually low.
So what does that mean in simple terms? It means you're looking at a pretty significant discount, somewhere in the ballpark of 20 to 25% compared to its direct rivals. For some reason, the market just seems to be pricing X-FAB a lot more cautiously.
Of course, a discount like that usually exists for a reason, right? So to get the full picture, we have to flip the coin and talk about what could go wrong. Let's dig into the risks.
First up, and it's a big one, is that market concentration. Being so tied to the auto industry means any slowdown there is going to hit them hard and fast. The entire chip industry is also famously cyclical. You get these brutal inventory corrections.
Plus, there's execution risk. X-FAB is betting big, spending a ton of money on new factories. If they can't get those ramped up successfully, that could be a huge drag, all while bigger competitors are breathing down their necks.
So, this brings us to the final weigh-in. Let's pull everything together and frame the core investment debate.
So, on the one hand, you have the bull case, a company plugged directly into unstoppable megatrends like EVs, protected by strong moats, with a strategic position in Europe and a discounted stock price. But then you have the bear case, a risky dependence on the auto cycle, tough competition from bigger players, and aggressive spending that's led to negative free cash flow.
And so it all boils down to one ultimate question for any potential investor. Do those powerful growth engines, the future of cars, of industry, of medicine, have enough horsepower to overcome the inherent, bumpy vulnerabilities of the semiconductor industry? That's the question you have to answer.